It's easy to remain calm when the water is still, but when the waves kick up a bit, we all get a little anxious and think about reaching for a life preserver. Does your portfolio have a flotation device for when the market gets choppy? Jim Lineweaver is here to keep our heads above water. Jim is a certified financial planner professional with the Lineweaver Financial Group. Now, I know market volatility is part of the game if you're going to be invested in stocks and in the market, but I still get nervous when I see a drop.
You do, yeah, most people do. It's not comfortable and it's not great for your retirement. But we have to understand that last year we almost had no volatility, and people got pretty comfortable with that. But that's not the norm. So then come January and the beginning of this year, you had a lot of volatility with everything that was going on overseas, and you had the new tax plan to decipher, and there was a lot of, some of the tweets didn't help, but needless to say, there was a lot of volatility, a lot of news out there, and people were trying to figure out how to digest it. And so you can measure this by what's called the VIX, or the volatility index, and that has spiked up. So you saw going into the beginning of February as much as a 10% drop in the market. People were kind of panicking a little bit, but not too bad. Came back up, and then the following month we had another 5% correction. So I think what's going to happen is, as we decipher all these things through the year, things will calm down a little bit.
Okay, and calm is better.
Calm is better.
So should I reduce my exposure to stocks since they tend to be a little bit more volatile?
Well, what you always want to do is there's certain disciplines. So if you have had a run up in your stocks like last year, like in the beginning of January, what we did is we automatically rebalanced our portfolio for our clients. That consisted of two things. It wasn't only just saying, hey, if you had a 70-30 mix of equities to fixed income and it ran up to 80-20, let's take that extra 10% back off the table, reallocate it. But it was also, let's look at the different sectors that will be performing the best over the next maybe 6 to 12 months. Some of those might have considered more international, more small cap that would benefit from the tax law changes, things along that nature. So it is important to not just throw in the towel when you get volatility, because hopefully you're going to live, another 20 or 30 years if you are in retirement, and maybe a lot of these stocks pay good dividends. You don't want to be forced to have a sell, though, if you all of a sudden need money. So there's a lot of planning that goes behind it if you have stocks in a portfolio.
Okay. Is there any time a market downturn could actually help me?
It can, believe it or not. So
right.
Nobody likes to lose money or anything, but there's this thing out there called a Roth conversion. And so if you have IRA monies, and everybody knows at 70.5, you have to start taking your withdrawals, and then every year thereafter, you have to take more and more. So if you have a drop in your IRA, you could convert it, and let's say you had 50,000, it went down to 80,000, you could convert it to a Roth, and let's say those holdings stay the same, then you're going to pay taxes on the 80,000, but then forever in the future, what's going to happen is you don't have to ever pay any taxes on that Roth coming back out. And in that scenario, you save taxes on about $20,000.
That can be worth it.
It can be.
So this sounds complicated. So do you work with each of your clients to come up with their own individual plan?
We do, because there's no cookie cutter plan that fits all. So not only do we have the tax side, but the financial, in coordination with the legal and everything too. So it's very important when you're dealing with market volatility, taxes, insurance, that you're going to work with somebody that can really put a plan together for your specific situation. Make sure you're dotting all the I's and crossing all the T's for a comfortable retirement.
And quickly, if I'm not planning on using my retirement funds as I'm going into retirement, should I just go crazy and try to invest and get a lot of risk going just to grow them a little?
Well, you could try, but that's kind of rolling the dice in Vegas. I'm not sure that's the best thing. So be very prudent. You want to measure your risk with your reward. There's alpha and other things that you look at when you're investing. Maybe you can speculate on a small piece of money that you're not going to need, but be very careful, because quick returns can also be quick losses too.
Quick downs.
Exactly.
Yeah. All right, good advice. Our thanks to Jim for giving us this great advice on how to stay calm when the market may not be. To help you stay afloat in the stock market, give Lineweaver Financial Group a call.
To find out more, call the Lineweaver Financial Group at 1-888-313-4009 or log on to www.lineweaver.net.